Morning, guys. So, stock market technical analysis video. Today is Fed Day, and I think today has a relatively high weighting in terms of market direction. And that's just because, for the most part, this market is trading on Fed stimulus and the hopes of more Fed stimulus. So, the Fed has pretty much hijacked the market. Clearly, the markets are rallying impulsively over the last few weeks to months, and it's all on Fed stimulus. So today's Fed Day, and given the nature of the setup today and kind of the volatility that we might have, I'm gonna probably pull some of my trades just for today, just to see what's going on, and I don't want to get caught on some sort of an impulsive move. The only trade that I'm really interested in holding right now is the gold trade. So let's kind of go through the Fed scenario and look at the charts, and we'll wrap it up there. So the first thing is the Fed most likely is expected to really do nothing in terms of rates. They're not going to raise rates. Unemployment, the economic damage that's been done is huge. So the Fed knows this. They can't raise rates. This will do more damage to the economy. They kind of are locked into kind of boxed into a corner right now where they can't raise rates when they keep saying inflation's low, and CPI came out 0.1 less, I believe, so lower inflation than expected. We're continuing to get kind of deflation. So the Fed, I think, is going to continue to chase that inflation target, and they're going to continue to keep stimulus pumping. Now, what does that mean? That means the market is most likely looking for any kind of cue that it's going to continue to get stimulus. If it gets that cue, then I see us popping up. And so let's look at where we could go. NASDAQ futures, we're kind of watching this. It's just grinding up here along the channel. It's waiting for today, I think. So if there's a positive development for the stock market, futures are probably going to run up here to this 10,230 mark, and I think that might be the blow off top on this rally. But again, could go higher. Well, if I'll show you where I get this mark from. If I scroll out, you can see the futures basically. That mark comes from back here. So this is a daily chart. So we have something to trade against potentially right here. Reaction, reaction, reaction. That was a reaction, and we're running right into it. We're almost there. So if they pop it right up to there, that might hold as the kind of the top of this rally, and then we get some sort of a pullback. Doesn't mean that this is not going to, pull back and then hold and continue higher, but I think we're probably due for some sort of a pullback at this point. So now here's the SPY futures. So this was your bearish rising wedge in the ES mini futures, and we broke to the upside, kind of was grinding around. Now we're failing and coming back down, but this breakdown is before Fed, so there's really you can't take anything before the Fed. You have to wait till after the Fed in order to get clarity. So I think it's important, the markets will be very volatile and chopping around this morning, and really you just don't. I don't take any trades pre-Fed day for the most part, unless I see something very significant. Then I kind of just wait. So we'll wait for that. Qs. So here's Qs. They've, bearish rising wedge right here, broke to the upside. So I don't know what that means. Typically this is going to resolve to the downside. So, maybe the Fed sets us in motion. It's very possible that one of the scenarios today is the Fed sees that the markets are just kind of running away, and running to the upside uncontrollably, and they need to throw some cold water on that. So they'll come out and with some sort of statement to try to do that, try to taper back the stimulus expectations. That's a possibility. They might not do anything, and I don't think they're going to do anything. But they're going to maybe they'll talk down the markets a little bit and try to throw some cold water. So if that happens, then we're probably up near the top of this rally, and then we're going to get some sort of a pullback. We'll have to watch this pullback and see where it wants to go. We've got a gap here, obviously, so we'll have to watch these levels. 229.33. We've also got gap fill at 223, and then we have this red line right here is kind of the long-term bull market in Qs, which was recovered again. It's interesting about this market, and this is why the Fed is so important. If I go to the weekly chart, you can see here, this is the bull market from 2009, and the only two times that we broke this trend line was in 2018, and the Fed came in and pumped more stimulus and dropped interest, pretty much dropped interest rates, or quit hiking rates and quit cutting their balance sheet and went the other way. And that was here. And then the other time where we broke this trend was right here recently, where the Fed pumped $6 trillion. So this market, it just goes to show that this market is really only held up. This trend is only held intact by the Federal Reserve. So makes, today important. Anytime the Fed speaks, we got to watch it. It's just the Fed now is at the point where, since they've taken control of the market so much, they have to, if they don't choose to, if they don't continue with that policy, the market will crash. The market is only held up by the Fed. So let's keep that in mind. Okay, so going back to the hourly chart, if they pop the Qs and they want to run, we could easily run up to this 250 mark. It's about 250, and that corresponds kind of with the NQ. If I roll out to the daily, that's kind of the top of this channel right here. So you can see reaction, 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 reaction high here, and we're almost right there. We've just been kind of going vertical at this point. That's a blow off top basically, but it could continue, so we could run up to 250, and I'll just be looking at what the market wants to do around that area. I'm not going to take a short on Qs until I see breakdowns of specific trendline supports, and I'll put out a video if I see that breakdown. Let everyone know I'm getting short again. Even though the Fed's in here, jacking the market up, doesn't mean the market can't go down. So again, what I'm looking for is breakdowns of support lines, just to mark these out. If you look, here on the triple Qs, you have this wedge. So what I would do is probably at least want to see a breakdown of this wedge, the bottom part of this wedge right here. And that comes in with the all-time highs as well right there. So 237 or so. I'm waiting for those kinds of breakdowns in order to look at another short. I'm not getting long. I'm not, at this point, I've missed this move. I'll admit that. And I'm not going to chase it. That's something I just don't do. I don't chase moves after they've been made, even though the momentum can continue. It's just too high of risk to jump on to a late trend, or a late move. And that's FOMO, and those people end up usually losing quickly. And those are the ones when markets sell off, usually it'll wipe out those late to the party people in one day, or that very first move. And that's why you'll see that first bearish move down usually wipes out weeks to months worth of price action typically. So that's why I don't chase. I'll just let that continue to run and look for an opportunity for this rally to end. Moving on, we'll look at a few other things, then we'll wrap it up. XLV, here's this little uptrend line. We now have 3 reactions, 1, 2, 3, and so this is starting to lift off. It looks like I'm not in this position right now, so just kind of watching it. If it, maybe this wants to join the rally party. Everything, for the most part, the market's gone into like complete buy anything mode is really how it feels like for the most part. And nothing, the junk and like, tech and junk stocks are being bid like crazy. And I have, I don't jump on any of that kind of FOMO stuff. I just stay off of that. It's just too high risk, too much like gambling. So any of the bankrupt companies or any of that, I just do not touch any of that. So That's just my style. Here's Walmart. So I didn't like the price action I saw yesterday, and here's why. The previous day we gapped down, but they recovered or got really close to this trendline support, 120, 140. It's the Walmart's really been holding this line pretty cleanly, and so you can see right here we gapped down and ran all the way up and closed right on it or very close to it. And then the following day, same thing. They basically moved, they opened higher and started moving down, but still closed basically right on that trendline support, and again right at that support. So we broke down and recovered it, and that's how I read that. So to me, that told me that there's now a possibility that we run back up to the trend line 125, make another tag of it. We've tagged it a bunch, so it's just chopping around this really tight range here. But today's Fed day, that could set in motion this trade to the downside if that's what it's going to be. Walmart continues to act weak compared to the rest of the market. It's up slightly today, but not much. It continues to trade weaker than the market. So when the market's moving higher, Walmart's been selling off slightly, and relative weakness. So today is just pre-Fed price action, just kind of waiting. So this one I still like, and I think we'll just wait till the Fed. I just didn't like the price action here. So longer term, I think the trade still works out to the downside, but we could make another run up and tag of this 125.60 level. So I need to wait and see what the Fed sets in motion for the general markets. Okay, so Zoom. I pointed out the other day in my video that I wasn't super confident in this upper wedge that I had marked out, so I pulled off half my position because I was just unsure. The wedge didn't have enough confirmations around this area to give me an idea that this trend line was right, because I could have drawn it down here like this, or possibly even up here. So if down here there was a different story, we're above the wedge basically. Up here, that would have been a breakdown. So completely changed the picture. And when I started to see that and notice it, I decided to pull off half. Today they're popping it a little bit. We'll see though. This is pre-Fed, so I'm not too concerned right now. Anything that happens pre-Fed, you just have to wait till after the Fed. So if they pop it, maybe the Fed comes out and they dump it. We don't know. But that's what's happening right now, so we'll continue to watch that one. Again, I only have a half position on that one. Here's NVIDIA. Okay, so NVIDIA, same story, pre-Fed, they're popping it, whatever happens. So the market is clearly saying that it thinks it's getting more stimulus. That's what I see in the tech sector, although I don't see that in the SPY, so I think people are just buying tech just to buy tech. And to me, anything pre-Fed is just not, it's gambling basically. You have to wait till after Fed. Pre-Fed days, there's just nothing to take a position on. So this is moving higher. Obviously today it's broken above the highs here. So if this holds, then I will be stopped out. My stop here's my stop right here, 363. 60 on a daily close. So yeah, that's my stop, and they gapped it up today, but it's pre-Fed, so this could be just a false break higher. We don't know. So gonna have to wait till after the Fed comes out to see what's gonna, where this thing's gonna close at. Here's one I'm eyeballing for a short. Nice clean uptrend line, DraftKings. Nice clean uptrend line, negative divergence. Nothing to do yet, but just waiting for that sell signal breakdown. So if there's some sort of an impulsive breakdown and it holds, then that would be a nice clean sell signal, and I'll look to probably get short this one. So going to continue to watch this, see what happens. Okay, and here's kind of the real reason why the market's been going higher, and that's because the dollar has been losing value. This is the Fed's goal, I believe, is to take the value out of the dollar. So if they continue on this path, then markets can continue higher. However, the dollar, or what those stocks are priced in, is losing purchasing power. So that's why we look to the gold trade. We look to play the gold trade if they're going to continue on this path. So gold still looks good. The miners are selling off a little bit this morning. We'll look at Barrick here. Selling off a little bit this morning. But again, it's pre-Fed. So, nobody knows what's going to happen. But if they're going to come out and do more stimulus, then gold should move higher. Gold right now, at least, Barrick Gold and gold in general, I suppose, is telling me that the Fed is not going to come out with new stimulus, but the market hasn't got that memo yet because the market's kind of moving higher. At least tech is. So tech's moving higher slightly. Gold is saying that the Fed's done with stimulus. It's mixed signals right now, and that's kind of what you'd expect pre-Fed. Is nobody really knows, and it's just kind of doing erratic movement. So we have to wait till after the Fed comes out to get a more clear picture. So that's all I got, guys, for this morning. If anything major happens and the market starts to set up for the next move after the Fed, I'll put out a video. Thanks for following along. Bye.